What's up, guys? Jay Martin here, investor and CEO of Cambridge House, and my guest today is Egon Von Greyerz, the founding partner at Matterhorn Asset Management. Now, this was a fun conversation. Matterhorn Asset Management is the world's largest private storage of precious metals, gold and silver, outside of the government banking system. So Egon has 4 vaults scattered around the world, one of which is pretty unique. It's at this undisclosed location in the Swiss Alps, essentially bored into the side of a mountain, exactly bored into the side of a mountain with like 10 layers of security, James Bond style entrance points. Pretty neat. So I had to ask him about that and what kind of clientele stores gold in a location like that with a private airstrip for access and all that stuff. But from there, we got into some really cool macro themes, picked his brain on supply chain dynamics, some of the biggest risks that he sees in the market right now. What else do we talk about? The debt bubble, civil unrest, food supply issues, all things that he's watching right now from a distance, thinking, when is this really going to hit a tipping point and get real? And when that occurs, what happens next in terms of global catastrophe? Now, he's not another doomsday sayer, just to make that clear. We talk about some pretty dire potential scenarios, but I tried to really put him on the spot and say, we've been hearing these doom and gloom predictions since 70s, when Nixon took the US dollar off the gold standard all through the 80s, through the 90s, and forevermore. And so why should we think it's different this time? And it was fun. It was fun. So anyways, here's Egon Von Greyerz. Fun conversation. Hope you enjoy this. As always, 3 things. If you enjoy this conversation, there's a pinned comment beneath this video where you can subscribe to my weekly newsletter. All the cash from this channel gets donated to an organization called Zero Ceiling. Zero Ceiling's mission is to end youth homelessness. Check them out if you like. And number 3, if you would rather listen to this instead of watch it, you can find me wherever you listen to your podcast. Just check out the Jay Martin Show. All right, here's Egon Von Greyerz. Enjoy. I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, what's up, guys? Jay Martin here, investor and CEO of Cambridge House. And I'm joined right now by Egon Von Greyerz, the founder and managing partner of Matterhorn Asset Management. Egon, it's great to have you on the show. How are you?
I'm fine, thank you, Jay. I'm good to be on the show. And, the world is certainly in a mess and it's going to get worse. So a lot to talk about. Not that we're going to solve the problems, but at least we're going to focus on the risks and the dangers in this world. Yeah.
All right. I like that. There's some threads to pull on right out the gate. Let's start with you, though. For anyone who's not familiar with Matterhorn and what it is that you guys do, could you just give us the super high level overview of how you spend your time?
Yes. Yeah. So, this is Matterhorn Asset Management. I started, in 1999. I mean, I was in banking and then in corporate life in the UK. And then I decided I was going to do my own thing. So, and towards the end of the 90s, I started worrying about the risks in the world. And obviously we had the NASDAQ and the tech bubble that we're seeing again now. And I recognize that because one of the things I've done throughout life banking or corporate life is to analyze and try to understand risk and protect against risk. So therefore, I started focusing on the best ways to protect against risk. And to me, gold was obvious because physical gold, that is, kept outside a financial system, which is perilous to say the least. And therefore, we set up a system that was for ourselves, for our own money, and some friends or investment partners we had, and we set up a system whereby we bought and stored gold in the safest places in the world, and so that's how it started. And then a few years later, we decided to open it up to other people who were asking for help. We could help them to preserve wealth, and that's what we're doing. We're very pure. We just do physical gold and silver outside the banking system in the name of the client. So it's very simple, incredibly simple. But by focusing on just one thing, we are experts at it. And we have pleasure in having people all around the world that take part in this.
And just to provide some scale there, outside of the banking system, Matterhorn is the leading provider of gold and silver storage for private investors. Is that correct?
Yeah, for high net worth individuals, yes. Yeah.
Now, a cool fact we could maybe jump into on that front is your vaults. I think it's called Gold Mountain. Just to give people a bit of context, when you say you store precious metals, that can mean a number of things. Gold Mountain is one of your vaults. Correct me if I'm wrong.
It's not called Gold Mountain, but it doesn't matter. We don't have a name for it. Yeah, we can call it Gold Mountain. I don't know if anybody else does, but let's call it Gold Mountain. It's a vault in the Alps, Swiss Alps. It's the biggest private gold vault in the world. And it's got a security which is James Bond-like. It's got 10 security zones, and some of them have to be opened remotely from hidden security centers, etc. So it's very special. No, not the American style guards standing outside with machine guns. It's the mountain that protects the gold. So that's for higher end clients. So that the minimum in that vault is $5 million. And then we have also in Zurich and also other places in the world where the minimum is 400,000. So we are catering for bigger investors. Obviously, smaller investors complain and say, "Can't you help us?" But we have an association with a company that I'm on the board of also that can do that for smaller investors, because we do understand that everybody should hold gold. It's just that our system caters for the more wealthy individuals and institutions, pension funds, etc.
Okay, and I just want to pry in the security system a little bit more because I'm super curious about how this functions.
Yeah, okay.
So the vault is it's bored into a mountain, correct? And then when you say, let me know if that's right, and then you say 10 security systems. So if somebody wants to access their gold, and let's call it Gold Mountain just for my sake, because I love it.
Yeah.
What's the process? How do they go ahead and get access and enter?
So the process is that you have to make an appointment, because you have to. You have to open be ready to open all the security systems. So we, for example, you stand outside the vault, and then they check you out on cameras already outside that, and it has to be at least 3 people. Six eyes principle, and then so they know that you've already had security checks on the people. And then basically you go through zone after zone. It's like it's like sluices, if you want, or so they open up. Some of them cannot be opened up on the spot, and some of them you must contact the security center, 2 security centers to open them up. So it's very high level security. And guards play no role in security at that level, because it's all about the structure that protects you.
Right. Okay.
So guards, for example, guards don't carry weapons, for example, because that's a security risk also if they do. So,
yeah, good point. Yeah, right. And fairly remote, right? I believe there's an airstrip right outside for people that want to land. Right.
Correct. You can land with a smaller private jet or helicopter or whatever. Yeah.
Okay. Fun. Exciting. Okay. Thanks for sharing on that. I was curious. I appreciate that.
Yes. No, it is, you should come one day and visit. We're not advertising it. We're not saying where it is. Obviously, clients can't come and see it. And we can't touch clients' gold without their authorization, because the security arrangements are such, etc. So, it's very high level. And it's in a nice area of Switzerland to come to anyway. So yeah, it's worth seeing.
I'm sure you can't disclose who your clients are, but I'd be super curious if there's anybody who stores gold who might surprise my audience, who's storing gold privately in your vault. I'm thinking like sovereign nations, governments, other than just independently privately wealthy investors.
Yeah, not really. There are, you have to be so careful with now compliance reasons for sure. If a small government, if they are in the right area, could store gold there, but otherwise, political persons, you've got to be very careful about, because that makes the risk a lot higher. So generally, I don't think anybody would surprise you. It's just wealthy individuals who are worried about protecting their assets.
Okay. All right. I'll leave it alone then. We'll leave it at that.
Okay.
So we jumped on the call, and the first thing you said is the world's a bit of a mess, right? And so we're just trying to make sense of it. So what's catching your attention right now, Egon, that maybe people are underestimating or misinterpreting?
I'm pretty boring, because for 20 years I've given the same message. And some people are, of course, get bored, because if you buy an asset like gold and silver, which we have, well, as a smaller part of because it's too volatile, but we do have silver also for clients. If you buy that, you're not buying it for instant gratification, then you're the wrong buyer and definitely the wrong client for us. We don't want people who go in and out and trade and buy and then want to sell quickly when it goes up. And we don't have those as clients either. We think that people should invest and hold gold for pure long-term wealth preservation purposes. I mean, we're talking about generational wealth here, and very few people think about in those terms today, because it's all about the instant gratification of Bitcoin going up or stock market going up, which it has done now for a very long time. So why hold gold? It's so boring. Yeah, but that's just the whole the beauty of gold. The boring part. It doesn't move quickly. It is not volatile, and it has over time been the only currency that has survived for thousands of years. Every single currency in history has gone down to its intrinsic value of zero. It's very simple. And therefore, you hold gold just to protect against those historical facts that always happen. People always think it's different today, but it isn't different today. It's never been different in history. Bitcoin is not going to change the monetary system or cryptocurrencies. And if it does, well, that might take thousands of years. So I don't see anything that will replace this for the purpose of wealth preservation. So from that point of view, we are boring, as I said, because what the Fed said yesterday, or they're going to taper or not taper, it makes no difference. I can just look at history, and that's totally consistent. We've never seen, over time. Gold always reflects the dying currencies. And since they've all died, it's a very, very, very easy equation. All gold does over time is to hold its purchasing power. Now, within that, there are, of course, fluctuations. And so now we've seen in this century, obviously since 71, really, when Nixon closed the gold window, and accelerating in this century, we've seen more creation of money than ever. It's gone exponential, totally. Global debt was just under 100 trillion in around 2000, and now it's 300 trillion. Nobody ever sees the derivative figures, or certainly not the true ones, but global derivatives is certainly a quadrillion and a half, if not more today. And that is a form of debt too, because the way I look at the world, that will become debt, because at some point, the central banks would need to rescue the banks when they're starting to the derivatives start to implode. Derivatives are wonderful for the buyers when they go up and when there's liquidity. But when there's no liquidity and people want to get out of derivatives, there'll be no market, there'll be no counterparty, and therefore, when counterparty fails, the gross risk is the same as the net risk. So then we're talking about possibly printing up to 1.5 quadrillion or more. So these are I'm not a prophet of doom and gloom. People think that this guy, he's depressing, but that's not the way I look at life. I look at things from the point of view of risk. And the risk to me is greater than ever. Obviously, the debt bubble is the biggest risk, and then that has affected all the other bubbles in this everything bubble market. So you have stock market bubble, you have bond market bubble, you have property market bubble. So these are all bubbles. The effect as an effect of the money printing, and it's not the U.S. hasn't had a real or the U.S. debt, federal debt has increased every year since 1930, with 4 years exception in the 50s and the 60s, and the Clinton years were not surpluses. They were actually deficits. It was just cheating. And because if you look at the debt during the Clinton years, the debt was actually going up. So there were no real surpluses at all. So that shows you how can an economy that basically has had a debt increasing for 90 years. How do you think that economy, how sound can that economy be? We're living on air. We're living on printed money. We're living on money that it suits everybody to call it real money because people have a vested interest. And so therefore, nobody dares to shout, the emperor has no clothes. Nobody dares to shout because the people in power, it suits them to say that, everything is wonderful. And that's why, so these are the risks I look at. These are the risks that we help people to protect against. And then in the meantime, you don't have to worry about daily market because, what the Fed says short term has zero influence on the medium or longer term. Is just for the day traders that take enormous position. But otherwise, the Fed doesn't know anything, basically. Well, they do. I mean, they have a lot of information, but they misinterpret it all the time. And they never forecast any problem or any disaster in the economy. They're always wrong on interest rates. They're always behind the curve. So the central bank shouldn't really have the role they have at all. If they probably shouldn't exist even at all. But they are there, and everybody pays so much attention to them. Of course, we have a market, as I said before, that is based on short-term speculation. And therefore, for the speculators, it has a major influence, of course. But for the long-term investors, it has none. You take the wealthy families in Europe, in France, for example, etc. They say you should hold one third property. They have their estates, 1/3 art and 1/3 gold. That's what long-term money does, and then they don't worry. Right. Rather than speculate in stock markets. Sure, enormous fortunes have been made in stocks, has been made in cryptocurrencies, etc. But that's not what long-term wealth preservation is about, the way we look at it.
Yeah. And I think, so that makes sense. And that ratio, for example, that's a good thread to pull on. Long-term serious wealth preservation, you described one portfolio allocation of 1/3 gold, 1/3 art, and 1/3 cash, right? Which makes sense if your goal is to preserve the wealth that you have. And as you were speaking, I was thinking, how do we get around the short-term mindset that investors so often fall victim to, where they're hyper reacting to whatever Fed headline comes out? That's all the media talks about, is what the Fed's saying right now, right? This tapering announcement 2 days ago, it was all over the press, but it really didn't affect anything. The market didn't even respond to it. But investors and media obsess over these minute-by-minute details, losing sight of the bigger picture. And I kind of understand why, because, if your goal is to preserve the wealth that you have, what you said makes sense. But if you're looking at everybody else's wealth around you and you want some of that, then I can understand the draw to speculations. I mean, I'm a speculator, right? I speculate on super early stage technology companies, super early stage mineral exploration companies, precious metals companies, all of this, right? I love the early stage, super high risk market. But the reason I know this from personal experience over the last 12 years of playing this market, that's why I own physical gold, because it gives me the confidence to make those high risk, high return bets or chase those high risk, high return opportunities. And that, I think, is a really, really important message that I would love to help people understand. Now, I'm not a gold bug by any stretch, but I own physical gold and enough of it that I know I'd be good for quite a lot of time if my income was shut off and my fiat currency was wiped out, to my portfolio crashed. Right? That's what it is to me. It's like that last minute insurance policy, the last ditch insurance policy. You said your approach is boring because you focus on such a long-term cycles, but that's why I wanted you on the show, is because investors get so wrapped up in what happens today, and it's to their own detriment. Whereas if you're able to step back and look at the long term, it's the same as an entrepreneur working in their business versus working on their business, right? You get lost in the trenches, you miss the big picture, and that's when you get blindsided by the black swan. And if we've learned anything in the last 24 months, is the black swans can happen to us too, right? And so what's your plan when those things occur? What do you think about that?
Yes, no, definitely. Of course, people will say that, his policy is all very well, to invest in the long term. But, in the last And then everybody takes the example of a bad year to start, like 2011 with buying gold, for example. I haven't made any money for 10 years, and I could have made hundreds of thousands of percent on Bitcoin, etc. But first of all, I'm not an investor that has the benefit of hindsight, and I don't think anybody does. So people who are unhappy about what they didn't do, that I feel sorry for them. Now, you have to remember that investment markets have been incredibly easy, certainly for the last 50 years. And I wrote an article a long time ago, or a few years ago, somebody who started investing in, or his grandparents started in 1945. And they just bought stocks all the way, since 45. And then the person, and then when he grew up, he put all his money into stocks, and he's made a lot of money. And the market has gone down, like in 1987, which I remember very well. It went down, depending on the country, 50 to 70%. And then in 2000 it crashed. In 2008-9 it crashed, etc. And people who say that it's always right to be long, because they are right. Because if they're just sitting on it and never panicking, since so much fake money has been created, certainly for 50 years or even longer, then it's been made up by inflation, and people, of course, never measure their money in real terms. People measure, like Americans measure it in dollar terms. Now, I will tell Americans that I started my working life in 1969 in Switzerland. Since then, the dollar has lost 80% against the Swiss franc. 80%. So why don't you? So when you measure your money in dollars, yeah, it looks good. But if you measure it in a real currency, it's a more stable currency, you've actually you've not made any money at all. And the same, if you measure it in real money, gold, you've lost 97% since 1971. So therefore, but it looks good. You buy your assets, especially if you're American, for example. And most countries it's the same, but all currencies are weak, some more than others. You buy it and measure it in a currency that is constantly going down in value, and so the wealth that you believe you have is an illusion, but still, it's people have, in nominal terms, not in real terms, made massive amounts of money in stock markets, in property markets, in bond markets in the last up to 50 years. So therefore, it's been so easy, they never had to worry about corrections. And therefore, people like myself who worry about risks, of course, if you are interested in short-term gains, you're losing out. I'm not worried about that because, sure, if you can have a portfolio, you don't have to put everything into gold. You put some into stocks or some into gold, etc., like you're doing. But and then you get these occasions like 1929, when the market collapsed 90% in the US, the Dow, and it took 25 years to recover. Nobody living today has ever experienced a long-term bear market. Nobody understands risk today. Nobody understands a bear market if they're not really stupid speculators and put all the money on black. But if they have a spread portfolio of investments, nobody's lost money for at least 50 years or even a lot longer. And therefore, you don't. Therefore, it works to speculate today. But you saw I remember in '99, I had a stake in a friend of mine built up an tech company, and I said to him in '99, we've got to sell. This is a bubble, and so we sold it in early 2000s to a Nasdaq quoted company, and I said we can't take stock, or if we take stock, we have to be allowed to sell it straight away. I don't want to hold on to it.
Okay.
So I saw the risk. The market went down 80%, as you know. A lot of companies disappeared. The company that bought our company in the end went bankrupt. They bought lots of businesses, and there was all a bubble. So and in '99, if you remember, everyone was an expert. Every single investor, every shop assist, everybody speculated in Nasdaq. I had an aunt, she's dead now, who lived in Florida in America, and she never bought stocks in her life, but she was sitting in front of the television and watching prices all day long and buying stocks. And my mother told her, yeah, she's making so much money. She's making so much money. And now she's so good at it. She's teaching her cleaning lady also to invest in stocks. And that was eureka for me. Yes. And then, of course, as I said, the market crashed 80%. So, if you're lucky and get out in time, nobody does, though. Most people lost a lot of money on the Nasdaq. And we are in that same situation now. But, I believe that we are at the end of a very long cycle. I don't know. Historians will tell us if this was only a 300-year cycle or if it was a 2,000-year cycle. I don't know. And we'll find out, or future generations will find out. But cycles don't die overnight. That's the thing. And, so I've been worrying about risks for a while. The risks are getting bigger by the day, but it's actually, the world hasn't collapsed yet. But that's not what the way we look at markets and wealth protection. That's not what it's about. It's all about, put some part or whatever it's this percentage you decide into wealth protection assets, like for example, precious metals, and then forget about it. And then you use other parts of your wealth to invest with a shorter term. It's just, and then so don't take more risk than you can sleep well at night, and that you're prepared for at some point. This market, in my view, stocks and bonds and property will go down at least 90% in real terms, and which is also measured against gold. That will happen at some point. Could be tomorrow, could be in 5 years' time. I don't know. It doesn't matter.
Yeah, that's the key right there. It doesn't matter. It doesn't matter. And, be cautious of how much energy you spend trying to make sense or find logic in these cycles and predict, as you said, is this an 80-year cycle, a 300-year cycle, a 2,000? It doesn't really matter, right? No. And I get why the euphoria continues because, at the front end of this conversation, we talked about it's not different this time, right? These cycles will continue. Every fiat currency in the history of fiat currencies has eventually collapsed to zero. This time it won't be different. But you could take that same narrative to an investor who's been in the market for 15 years, right? And what do they know about the markets? Well, they know they go up, right? Sometimes they correct and then they go up again, right? And that recency bias is very, very influential. But you could even dial that back to the 50s and say, what do markets do? Well, they go up. Sometimes they correct, but then they go up again, right? And you said it, 1929, that was a 25-year recession. But after that, it's been, relatively speaking, an extended bull market with some deep corrections and horrifying ones. But you could have...
Can I just interrupt? Yeah, that dates back to the Fed, of course. Since the Fed was created, we've had this money creation, which has been spectacular. So that's why it's been easy. Sorry, but that's where it stems from.
That is the catalyst, and I understand investors' mindsets who are listening to, some of the gurus in the space who are predicting the real crash is coming, but they've been predicting the real crash is coming since the 80s or earlier, since the 70s and Nixon, and so those investors can look at those narratives and say, "You're telling me this crash is going to be different?" Well, you've been saying that for 2-3 decades at this point. I don't believe you, right? Markets go up. That's what I know, right? Which is the struggle that people face, right? It's hard to navigate that.
Absolutely.
My answer to that is you don't know, right? You just don't know. And because you don't know, make sure you have some kind of an insurance policy in place, that like sovereign insurance policy. So you can ensure that your personal sovereignty, that you're good, no matter what happens out there. You need to have something in place that puts the peace of mind in your brain that knows I'm good. No matter what happens, I'm good because I've got my personal insurance policy, right?
Yeah, absolutely. Yeah. So from that point of view, it's very simple. And then, No problem if people want to speculate, but just don't speculate with all your money, because it's nobody understands that it's just been too easy now with, and the money printing is accelerating. And, the way we look at it is not real money. It's just air. And when the value of that, of those bubble assets implode, so will the debt. And that's when, at some point, this will happen. I don't know. I think it could happen within 5 years, but I could be wrong. But I think the risk is there. The risk is enormous. There's never been a situation in history, as far as I know, where you have this as a global problem. It's not one country anymore, not even one continent. It's the whole world. It's never happened before. Before, if Argentina defaulted or one country, there was no problem. It was written off by all the countries, and they went on. When Germany had hyperinflation, again, it was people could write off the debts, and they had to in the end. But that created other problems, of course, war, etc. But we've never seen a situation in history when every major country in the world is running deficits and running up debts at a level which is unprecedented. So that's the risk we talk about now. And it's not just America or Europe. It's it is the Asia, China, of course, emerging markets, etc. So it's worldwide. That's why we're looking at a much bigger problem.
Yeah, with a level of globalization that obviously we've never experienced before, and everything is so much more reliant on everything else, right? The house of cards is very real. Okay guys, 3 last things. First, if you enjoy my interviews and would like a bit more, you can subscribe to my Friday newsletter. It's free, and the comment to subscribe is right beneath this video in that pinned comment. In this newsletter, I share my key lessons learned, takeaways, and any actions that I might be taking in the market as a consequence of what I've learned on the show. Second, when I started a YouTube channel, I never anticipated generating any advertising revenue. But coincidentally, I do now, which is awesome. And so what I've decided to do is donate this to an organization that is very close to my heart called Zero Ceiling. Their mission is to end youth homelessness. The way they do this is by providing young people experiencing homelessness with supportive housing, employment, professional support, life skills, and outdoor adventure. Because often young people in urban centers with no resources will never get the opportunity to experience wild places, nature that can be so transformational, and absolutely was for me. Third, if you prefer to listen to my content, you can now find us wherever you listen to podcasts. Just search for The Jay Martin Show.